Why would I pay interest to borrow my own money? Scumbags. Yikes. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's episode, in our Myths, Mysteries, and Misconceptions playlist, we're going to be discussing the much touted idea, it's a fallacy, that the insurance company, a whole life insurance company, is going to charge you interest to borrow your own money. Let's talk about it. So let's go to the beginning. Okay. When you take dollars and let's go through a few examples here. Make a deposit at your local commercial bank. Is that your money anymore? Is it really? I know the first knee-jerk reaction is that, well, of course that's still my money. Is it though? Here's a way to test that. If you were to write your name on that money that you deposit at the bank, could you come back the next day and get your money? No. Could you come back in an hour and get that money? Nope. The bank's got it. Working, moving. Okay. And that's what it is. So when you put money at the bank, what's it called? Deposit. Right. That's right. So you've deposited money at the bank. You've deposited it with them. Now, you have an expectation, of course, to be able to get that much again, but it's not going to be that money. That is now the bank's money. You've made a deposit. The bank owns that money now. They owe you that equivalent? Sure. Okay. Let's use another example, and let's do something like insurance. Okay. So if you pay some car insurance, if you pay home insurance, something like that, phone insurance, is that money yours anymore? Nope. You bought a product or a service. Okay. So when we have money exchanging hands for a product or a service, to include whole life insurance, you're procuring a product or a service with whole life insurance. And we'll get to infinite banking here in a second, of course. But I'm just trying to address whole life insurance, generically speaking, for the moment. When you pay premium dollars for a whole life insurance policy, just like for a home insurance policy, that's not your money anymore. You have procured for yourself, with a whole life policy, a guaranteed death benefit. Guaranteed death benefit, period. Okay. And with the home insurance, just again, if your house were to burn down or what have you, to be able to replace that home for that amount that you insured it for. Okay. So when you're paying premiums, it's getting you a product or a service with whole life. It's getting you that guaranteed death benefit. Now, the nature of a whole life policy, and particularly, now I do want to talk about a properly structured whole life policy with a mutual company that pays dividends, because that's what we do. We're implementing the infinite banking concept. This whole playlist is particularly, of course, trying to address myths, misconceptions, mysteries around whole life insurance, infinite banking, implementing becoming your own banker, and the podcast at large for your general learning education, of course. But when someone like Dave Ramsey says, and we're going to break this down piece by piece, the insurance company charges you interest. Let's stop right there. Where can you borrow money without paying interest? Is that even a thing? Because, see, here's what's missing out of the conversation across the board in the financial world. Across the board. Banking. The fact that everything is financed. Let me say that again. Don't let me go too fast. Everything is financed. Perhaps you're hearing me say that for the first time. Everything is financed. Either you're borrowing somebody else's money on their terms and conditions, fronting collateral, assuming all these different things, and you pay them interest to do that, like with a bank loan. Or you pay cash for things and you lose the opportunity to earn interest. If scripture's interesting to you, I'd encourage you to revisit the parable of the talents, Matthew chapter 25. 3 guys were given 3 different amounts of money. One went out and, doubled what he was given. Another guy went out and doubled what he was given. It was a lesser amount, but he still doubled it. They did real profitable things, of course, with the money. The third buried it in a hole in the ground. Put some money in a hole in the ground. Now, when the owner of that money came back and he talked to that guy saying, hey, what'd you do with the money I gave you to put to work? He said, well, I buried it in a hole in the ground. Didn't want anything to happen to it. He says, you at least should have gotten me some interest on it. You at least should have done some banking with that. Okay. Not a hole in the ground. Can't do anything there. So that I could get some interest on my money. Because there is a cost to capital. Okay, you're either paying interest or losing interest. So, since everything's finance, why does Dave or anybody else even bring up this idea of paying interest for borrowed money? You are borrowing money. Why wouldn't you pay interest? Now, because we're implementing the infinite banking concept, we're saying that you should be an honest banker with yourself. If you borrow from your private banking system, of course you should pay interest back, because capital has a cost to it. There is such a thing as EVA, economic value added. Okay, certainly, and folks are experiencing this at the gas station and at the grocery store. Inflation is taking place. Okay, we need to account for these things. Capital has a cost. Everything is financed. So if we are going to borrow money, we should pay interest. And to be an honest banker, that actually means that we should pay a market value interest to ourselves, right? So if the insurance company is charging 4%, 8%, 5%, whatever they're charging, whatever that number is, what would it cost you to do that in the marketplace? If you would have had to have gone and gotten a personal loan at 10.75%, or if you would have had to have used a credit card for 28%, that's what you should be doing. Now, you're the banker. The beauty there is that you get to control when, how, if you're paying that back. Interest, the principal, any profits if you're using a policy loan for something profitable in your life. Okay, you're the banker. You get to control that. That's a beautiful thing. But interest should be paid on borrowed money. Now, let's address the point of borrowed money. Yes, Scripture says that the borrower is servant to the lender. No question. And Dave will tout that. And I get that. I can appreciate that. I can respect that. I do respect that. Think about this, though. If you're the banker and you're borrowing from your private contract, and here's where we can get into the nuts and bolts of implementing infinite banking, how properly structured whole life insurance is the ideal entity for your banking in life, okay? Because a properly structured whole life policy with a mutual company that pays dividends is a contract. It is a contractual right that you have to pay a premium amount that you've chosen. It gets you a guaranteed death benefit, gets you a guaranteed cash value that you can leverage, you can bank with that value, and it does say cash value. It's not money per se. Money is a means of exchange. That is a value within your contract. So a whole life insurance policy is a contract. You are leveraging your contract. You're leveraging this private piece of property that you own for your banking purposes in life. It's a beautiful thing when you really look at it. It's so cool. So borrower, servant to the lender. Should I be a servant to myself in banking? I think so. Who would I rather be a servant to? Nobody else. Okay. Now I understand that the good Lord is owner of it all, and we should be good stewards. And again, I appreciate that about Mr. Dave Ramsey and others, folks that encourage us to be good stewards of money. Well, if I'm the borrower, if I'm the lender, boy, it doesn't get any more simple than that. It doesn't get any more profitable than that. It doesn't get any more controlled than that. Okay. It's beautiful. So paying interest, we've addressed that part of this phrase, this phrase. The insurance company makes you pay interest. We've addressed that. On money that you've borrowed. We've addressed borrowing now. Okay. Your own money. So the interest company makes you pay interest on what you borrow, meaning your own money. Okay. So let's talk about that your own money part again. If I pay premiums to an insurance company, is that my money anymore? No, that's not my money. So Dave or anybody else that says they're making you pay interest to borrow your own money, that is in error. Okay? Whether honestly or dishonestly touted, that is in error. It's not your money anymore. That is the insurance company's money when you pay a premium. Now, when your contract, your whole life policy, stipulates that you have a contractual right to access capital because of this relationship that you have with the mutual company, okay, you're not paying interest to borrow your money. You've paid premiums. That's the insurance company's money. But because of this relationship that you're a part of, this private ownership that you have over this contract, the insurance company is saying that you have this access to capital in a known interest environment because, of course, the insurance company as a profitable business, and don't we want the insurance company to be a profitable business if we're part owners of the company? Yes, we do. Yes, I do want all the insurance companies that I own policies with to be profitable, of course, because I want them there for my whole life, and they will be. And I want them to be profitable. I want them to be able to pay dividends because I enjoy those. All the things. There's so much here. All the things. But because of this contractual right that I have to access capital, of course the insurance company is going to charge an interest on that loan. Okay, that's a policy loan, meaning because I'm a policy owner, the insurance company will make a loan to me from their general fund. So that's not a loan from my policy, actually. That's a loan from the insurance company because I'm a part owner. I'm a policy owner. Okay. Because of that established relationship, I can have a policy loan by leveraging the cash values of my policy. So when you own a policy, you have a cash value. You can leverage that cash value via a policy loan for the things that you want to do in your life. And real quick, I'll say, from the start, from the time that we got our first policy in 2016, we began paying off tens of thousands of dollars worth of bad debt. We paid off the student loans, paid off credit cards, paid off the car. And then, of course, over the course of time, as we acquired more policies and did more things as our own bankers, we financed family vacations, property taxes, recurring expenses, business expenses, all kinds of stuff. We're on our journey of becoming our own banker, being our own bankers. We own 6 policies now. We've been practicing this for the better part of a decade. All that to say that we made premium payments over those years in these policies. We did use policy loans for the things that we wanted to do in life. And the whole time we've been able to enjoy compound growth, rising death benefits. At the end of the day, that matters to us. We have children. We want to do something big there, thinking about legacy. We've enjoyed financial control over this private monetary system that we've been building and using. So when someone says that the interest, that you're paying is on your own money from borrowing your own money, that's simply in error. Let me give you another couple of thoughts right here in addressing what Dave and others say about the insurance company makes you pay interest to borrow your own money. What does Dave Ramsey do in life? Just for one example. There are others, but what does Dave Ramsey do in life? Isn't he, and I can appreciate this, I own his books. I read his books. He's a best-selling author. That's a business, isn't it? He earns income as a business owner by selling books. Great. I love it. I buy him. I read him. He's great on so many things. Okay. We're missing the mark on whole life insurance and infinite banking, but here we are. Doesn't he also have a big company, Ramsey Solutions? Right. Business. It seems from what I've gathered, I don't have insight on his portfolio and financials, but he says he puts money in 401ks and IRAs. And I have no reason to doubt that. Okay. Also, seems like he's done some things in real estate before and still does. I have no reason to doubt that. So let me get this right. Dave, big business owner and investor. Dave Ramsey, the business owner and investor, is telling us, well, don't give money to the insurance companies. Don't own these whole life products. Do X, Y, and Z, the baby steps. Emergency fund, pay off your debts, full emergency fund, 3 to 6 months. And then we get to stuff like put 15% into these investments. Okay. pay off the house early, save for college. I swapped those two, but you go through those steps, right? And he's a business owner. Keep that in mind. So the business owner is saying, do X, Y, and Z. He's got this approach to personal finance. While the average American deposits every dollar that we earn into someone else's business before we ever touch it. Uncle Sam's had his hand in the pot. Can't skip over that, okay? And that really, really matters for those of us that are implementing infinite banking, to be able to account for tax-free windfalls to the next generation, to be able to operate in a tax-free environment where we have access to a compounding pool of capital in a tax-free manner. That's a big deal. But Uncle Sam has his hand in the pot before we ever touch, okay, our money. Because it isn't your money direct deposited, so many of us, right? Direct deposited into a bank. That bank is a business. So see, banking's not even making its way into the conversation until folks are exposed to the idea of becoming your own banker, because everything else is, well, pay off your debts, invest here, do this, do that, and banking's not even in the conversation. And yet, every dollar that we earn goes through a bank. What is a bank? A business. So what I'm saying is, I would encourage all business owners, including Dave Ramsey, to think about the power that we are overlooking to put all of our cash flows through someone else's business, a business that's not sharing profits with us, that's making us jump through hoops to be able to qualify and, oh my goodness, pay interest on. So that's a powerful thing to recognize, that we put all of our dollars through somebody else's business that we don't own or control. I'm saying you can use your cash flow to build your own privatized banking system. You can become your own banker. You can use whole life policies that have been properly structured for the banking purpose with mutual companies that makes you part owners of those companies that also pay dividends. These companies have paid dividends for well over 100 consecutive years. Now, Dave Ramsey's been on the radio a long time, written books a long time. I get it. But there's something so big to recognize that through world wars, global pandemics, recessions, depressions, you look up what's happened over the past 100 years, okay? Big picture. And these companies have not only been above board, but paying dividends 100 years consecutively, plus some of them for a lot longer. It's a beautiful thing. You can be your own banker by learning about this process of becoming your own banker and implementing it. So when you hear someone say, okay, whether you've already implemented this process, we're still inundated with the noise, or whether you're still vetting this concept of becoming your own banker, and someone says, well, these whole life insurance companies, they make you pay interest to borrow your own money. We've broken that down. It's wrong. Wrong. Okay. So if you'd like to have a conversation about what it could look like for you to implement this infinite banking concept into your household or your business or your investing, then you can check out a free presentation and get on my calendar from our website, durhamtalents.com. This has been a great pleasure for me. I look forward to our next conversation. Have a great day. Take care.